Today on Taxsplaining, we're going to be talking about how to take advantage of your carryovers. Don't you think it would be useful information to know that you could sell, say, 100,000 of stock gains and not pay any tax on that? Wouldn't you like to know that? All right, so here we go. So if you ask Gemini Pro AI, what is a tax carryover? They'll say, a tax carryover is a valuable provision in the tax code that allows taxpayers to apply unused deductions or credits from one year to a future year. Essentially, if you are unable to claim the full amount of a tax benefit in the year it was generated, a carryover lets you carry the remaining amount over two subsequent tax years to reduce your tax liability. All right. So, sounds good, right? The problem is, if you have a carryover, it means that there were deductions or even worse, credits that you were eligible for in a given year that you didn't get. So you had a deduction, but you didn't get to use it. Now that's not a good outcome, is it? That's not what I would want. So if you ask Google about carryovers, it'll name capital loss carryover. And that's a really common one. If you have a big capital loss, you can't deduct that against your regular income. Capital losses can only be deducted against capital gains. That's it. And you get a $3,000 adjustment for that every year that you have a capital loss carryover, but nothing more. So I have worked with clients that have hundreds of thousands or millions in capital loss carryovers. That's bad, right? It means you lost millions or hundreds of thousands and you didn't get to take a tax deduction for it. So having a carryover is good. Generating a carryover is bad. The other thing to remember is not all carryovers are good. There are bad carryovers too, but most of them are benefits and benefits that you didn't get. So there's two things to watch out for here. Does your tax preparer even know about other types of carryovers? And do you have them? So I'll tell you right now, if you have a lot of rentals or even just a few rentals and you are losing money or you're about breaking even on your rentals, then after depreciation, there were probably losses. And if a competent CPA were to look through your tax return, they'd be able to tell you how many hundreds of thousands of losses haven't been deducted and are sitting there in a bucket called the passive activity losses. So, asking Google about loss carryovers, it doesn't say anything about passive activity losses, but this is the killer for a lot of my clients. Is you have rentals, you own a business or businesses, or you're a partner in a partnership, and you're not an active participant. So that's passive activity income if it's income, right? When we say income, we're talking about the net, but it could be a loss. And if it's a loss, that's where you get stuck. So with passive activities, if you have a $1,000 loss on your one rental and you have a $1,000 gain on another rental, they'll cancel out. You won't have any taxable income on your rentals. You won't have any carry forward. But what I see all the time is clients have major improvements. They do renovations. They do cost segregations, whatever it may be to try to get more deductions on their rentals. And then they don't get them. And they didn't ask. And the CPA that they work with didn't explain how to make that work for them. A client I've been working with for many years came to me. And I look at all these losses and I start saying, how do we get rid of these losses? Now, you got to ask yourself, is your CPA doing that? Because if we could free up these losses, you could save a lot of money, especially a guy who owns a lot of businesses. You're in the top tax bracket. If you can free up hundreds of thousands of trapped losses, you could save potentially hundreds of thousands or at least tens of thousands in tax, right? So all I had to do was start asking him about the facts and circumstances. But if you don't have a CPA that understands this, you're never going to get to this point, right? So the facts and circumstances are looking at the 7 material participation tests. Did you ever work in these businesses? And some of the businesses, yeah, sure, I worked in, or this is my business. I work in this business, or my wife works in this business. But many of his businesses he's never worked in. He bought the business runs with managers. He is not involved. He doesn't even live in the same state, right? That's a passive activity. All right. But what happens is your CPA, your tax preparer, gets the K1. They see it's an S corporation and they go, oh, non-passive, because S corporations are non-passive, right? Well, no, that's not right. In the most simple of situations, that's usually true, but it's not necessarily true. And so when you have a CPA on your side that's asking those questions and saying, what is this? What is this? What is this? All right. I know that might not sound fun, but when they're doing it to try to save you hundreds of thousands of dollars in tax, all of a sudden answering those questions doesn't seem so bad, right? The big one is a net operating loss. And most of us know about that. And even if you don't, what happens is your businesses lose so much money that you actually have negative income. You're able to deduct all that. You're able to deduct all your losses. And so you get what's called a net operating loss carry forward, which means the losses apply to next year. If you went to a negative, there's a complicated calculation for it, but that negative then carries into next year, right? So that's a net operating loss. And that, you're going to get that. There's no tricks to that. And you don't need a CPA who knows what they're doing to get you a net operating loss. The software will do it, right? Their tax software will just make it happen, and they may not even know you had a net operating loss, but it will work. So, again, if you don't need a sophisticated CPA, you're going to be fine in that scenario, right? Capital loss carryover. Well, if you just stumble into a bunch of capital gains, that's gonna release your capital loss carryover. And assuming that when you changed from one tax preparer to the next, that they actually analyzed your tax return to see if you had carryovers, see what they are, and actually put them in, right? It's very common to switch tax preparers and you don't provide all the pages to your tax return, or you provide a stripped down copy that the tax preparer gives you and it doesn't have the information, and all that information gets lost, and then your carryovers are gone. And they're not really gone. Like, if somebody knew about them, they could be used still. But as soon as you start filing tax returns without them, and then nobody ever looks further back to see what you had, it's over, right? The IRS isn't going to say, oh, by the way, you had a capital loss carryover, so we're not going to we're going to lower your tax bill because you had a capital loss carryover, right? No, the IRS doesn't do that. And especially, they're not going to say, hey, you could have released your passive activity losses here. We're going to give you a big deduction, right? They're never going to send you a letter that says that. So if you're concerned that your tax preparer doesn't know about carryovers, or that you're not taking advantage of your carryovers, or they're not trying to proactively release your losses, it doesn't mean we can this year. It doesn't mean we can next year. It doesn't mean we could release all the losses. But somebody has to look at that and at least see if there's a strategy, right? If they're not trying, then there's no solution. And you're just going to keep not getting your deductions. And so when you work with a good CPA, you're going to find that they're constantly trying to use the rules to your advantage. All right? And that's what I do. I don't do anything shady. I use the rules to your advantage. And my clients save generally a lot more money than these supposed tax saving tips. You need an S corporation. You should be paying your kids, basic stuff, right? That you could honestly, you could ask AI and get the exact same answer. These people don't know what they're talking about. All right. If you need somebody who actually understands the depth and complexity of taxes because your situation is complicated, that's what I'm here for. And hey, I have an appointment link on all my videos and on my channel. If you're somebody that needs a good tax CPA every year for ongoing work, not some one-off project, not help me with my IRS debt, but I need a good CPA every year. I have personal tax returns, I have business tax returns, I have partnerships, estate and trust, whatever it may be, right? You've got a whole thing. And you can't trust that to a bookkeeper or a bookkeeping service. You need a true professional certified public accountant that's been specializing in tax for their entire career, that worked hard in the trenches in big firms, that knows this stuff, that learned the hard way, right? That's what you get when you come to me, and I would be happy to help you.